Analysts anticipate an increase in T-bills yields this week due to tight liquidity. As investors focus on the T-bills primary market auction, where the CBN is scheduled to roll over 149.6 billion naira worth of maturities tomorrow. Seun Ameye, fixed income trader at CitiBank Nigeria, joins me now for more market updates. Seun, the bears are holding on to the equities market. Same is replicating here. We are still seeing that bearish undertone. However, the biggest takeaway we see here is the fact that we are expecting some level of rise in bond yields.
Well, I wouldn't say we are expecting some level of rise in bond yields. I would say that the money market is pretty tight right now. Overnight rates around 19%.
Due to the liquidity
yeah, it's liquidity constraint. So, I mean, historically, when overnight rates are that tight, you tend to have, yields rising up, especially at the primary auction. So, really, I'd rather put it that way and say that, bond is going to rise. But
and in terms of investment positioning as well, we've seen T-bills, it has been within the long end of the curve, the bond market as well. We're seeing investors' position between the mid to long end of the curve. Do you see any interesting new dynamics come into play this week?
Well, what I think is, tightening liquidity is a short-term issue. It should affect short-term instruments. I think that's why you see the rising yields. You find that mostly on the one-year T-bills and also on the short part of the bond curve, maybe between the 3 to 10 year. On the longer part of the curve, you do have investors who are, who are more interested, more like their preferred habitat. The pension funds, they prefer, the long-dated bonds. So really, nothing much is going to change.
Nothing much will change.
So we're just going to see more like, a bear kind of flat.
A bearish mood. But talking about some updates we are having from Washington now, the World Bank is not necessarily optimistic in terms of global growth. It's expecting that to slow a little bit. And then the issue around food security from Moody's as well is also supposed to feed into the recurrent source of credit risk for sovereigns. At this point in time, where we are having tightening global financial conditions and governments still are sticking to their penchant for borrowing, how do you see the market responding?
Well,
and inflation is also coming out this week.
Yes, inflation will come out this week. We'll see what the figure does. On this part, the central bankers, in their various fora, continue to, express the fact that they are going to keep on tightening if the rate of inflation does not come down. So we're going to see what inflation does. I've heard some analysts say it may likely come down this month, but we'll see. We'll just see what they do. What inflation does. If inflation rate keeps coming, keeps going higher, I expect the central bank to continue tightening.